Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Hey, welcome to the Second Bite Podcast. My name's Todd Taskey. I am your host. We are in question 3 of the PE Insight series. And, we did this series, which you might want to check out, called the Founder Insight series. And this was a whole bunch of founders. We did it in the same format where we asked one question and a bunch of founders gave us answers. We had 4 really good questions during that series and a bunch of founders that gave great feedback. But I had a lot of folks that reached out to me and said, we'd love to understand what it's like from the other side of the table, from the buyer's perspective. What do they see? What do they think? And so that's what this series is all about. Question 3 is on investment committee. If you know what investment committee is, you are a sophisticated player in the world of private equity. If not, you're like the rest of us. But investment committee has a lot more to do with your eventual transaction, your partner, the criteria, the structure of your deal, a whole bunch of things. And so this is a real good behind the scenes look at the way private equity firms operate and the way people think about the investments that they make in companies like yours. So I think you'll enjoy this episode a great deal. We've got wonderful guests, as you know, if you've been listening to the series. We also have a wonderful sponsor, our friends at Fiscal Advocate. Fiscal Advocate is terrific. They will help any business, but certainly agency founders, understand and organize their financials. And understanding them is so critical in terms of making good investment decisions and good operating decisions as you grow your business. So thanks to our friends at Fiscal Advocate. Enjoy episode number 3 in the PE series, where you will learn about investment committee. Thanks. Trenton Sisson from Mountain Gate Capital. Can you describe for me what investment committee is like at Mountain Gate? And what should people know, what should entrepreneurs know about investment committee that might change the way that they approach a transaction?
Yeah, so first off, our investment committee process is very similar to probably most firms in that we have a 5-person investment committee. It's all 5 of the managing directors of the firm. And we effectively need to vote unanimously to support a deal in order to have the firm's support to go in and complete that transaction.
So it has to be 5-0.
Yes, it has to be 5-0. We've not done a deal where it's, there's any dissenters. And so we, and the way that we do this timing wise is generally we have the bigger meeting, the more important one is at that LOI stage. So when we're going to put an LOI in front of somebody, that's generally the first time we have a major meeting, go through all the kind of major details and everything. We understand all the work that we've done and get the firm's blessing to go forward and sign the LOI, start spending real money, and go forward towards closing the transaction. And then we generally have a second one that happens, maybe after all the major diligence work streams are completed as a check-in update. It's the confirmatory meeting where you sign off to say, yes, here's all the things that we thought pre-LOI. Here's all the things that have been confirmed post-LOI. We're still feeling good. We're supportive. Here's anything new or different that's happened. And we recommend moving towards closing a deal. Obviously, we're a small firm, so there's a lot of informal updates that happen for everybody along the way. So generally, there's no real surprises by the time you get to that meeting. But that's a little bit about our process.
Anything that would surprise entrepreneurs just about investment committee in general?
Potentially. Probably the biggest thing that I would say is that people may or may not appreciate is that the overwhelming majority of the time that we spend in our investment committee discussions is around mitigating the potential risks with a deal rather than exploring the upside opportunity with things. So, it's things like, hey, how do we think about industry risk or client risk, or how do we think if the founder or management team leaves, what are the key people that you need to make sure stick around? So we spend way more time talking about everything that could go wrong than everything that could go right. And that may be a major difference. I think sometimes people confound or conflate kind of how venture capitalists approach the world, which is kind of all pure upside. Like, hey, this could be a $10 billion company, whereas PE investors tend to look at the world in a much more, how do we manage risk? How do we manage the downside? And, we're generally investing in really good, solid companies already that we know have the path to being successful. So we need to spend less time talking about that and more time talking about how do we make sure none of these things go wrong and potentially create issues for us and the partners that we're investing with.
Trenton Sisson from Mountain Gate Capital. Great insight as always. Thank you.
Thanks, Todd.
Bill Sommerschield from Keystone Equity. Investment committee is something that I think a lot of entrepreneurs aren't really familiar with. Can you describe what investment committee is like, for example, at Keystone and what happens in that? And maybe one takeaway that would be helpful for entrepreneurs to understand about that when they're trying to get a transaction done with private equity?
Yeah, no, it's look, I do think our investment committee is probably a little different from larger organizations because we have 30 people. We do tend to be more inclusive around that discussion and building consensus around the group. But I don't think that this item is frankly unique to us in the sense that look, the reality is every single business can be improved. The reason I start with that is because there's a reason somebody could choose to pass on literally any investment. And so because of that, there are things that are going to come out during a process. There are improvement opportunities or restructuring opportunities if you want to double, triple a business from where you start that are inherent to that discussion. And so in the lead up to it, or even, sometimes we'll have a management team come and talk to the senior leaders of our firm, demonstrating some vulnerability and a willingness to be a true partner and listen to other opinions and kind of work together to find the answers on how we can organize the business best to maximize the long-term potential. Like that's just a key piece to it. And I think again, getting back to like the flaws in the business are okay. But we want to know that we've got somebody that buys into the fact that, we've got a lot of experience in working with entrepreneurs. We certainly couldn't run their businesses, nor is that what we're set up to do. But those experiences can be valuable. And so acknowledging flaws, talking about ways we're going to improve that, whether it's organizational, whether it's with talent, whether it's systems and operational processes, business development, whatever it is, like that allows us to go into that conversation, talk not only about what we found that we think can be improved to add value long-term, but the discussion we've had with that founder around their ideas, to get to an end state and the collaboration of those discussions. And I think the other piece is, we do tend to use acquisitions as a tool to facilitate a strategic initiatives within a business quite frequently. And so thinking about the value creation strategy ahead of time, and again, it's not a prerequisite, but when somebody comes in and again, whether that is big talent investments they want to make, different ways they want to think about the systems that are running the business, other services that we could either seed with organic investment or acquire. Like if somebody comes in with some of those ideas, it definitely smooths that discussion because, we, as much as we love organic growth and we want to drive organic growth, we're not in it strictly for organic growth. We want to use, acquisitions as a tool. And so if somebody's already got those ideas and we've got alignment around that, it can smooth that process.
Super helpful. Bill Sommerschield, thank you. Brian Schmidt from Court Square. Let's talk about investment committee because it is something that I think a lot of entrepreneurs aren't familiar with, don't understand the impact of what happens in investment committee. So can you just describe that a little bit and what it's like at Court Square?
Absolutely. So you're right in that a lot of founders, especially earlier stage founders and sellers, may not even know an investment committee exists. The ones that do know it exists, right, are often mystified by the investment committee, and it's a bit of a black box dynamic to them. Investment committees can function very differently across firm, depending on the size of the deal, the capital requirements for a deal. I mean, some firms even have different levels of investment committee. At Court Square, we just have one investment committee. It's a majority consensus vote, right? And so you need majority to move forward on a deal. What I would tell a seller that's incredibly important, and we see this when we're selling our own companies, Todd, I would be asking kind of the following questions. And this is really to get to the bottom of, as a seller, are you confident that the potential buyers for a company are in sync with their own IC at their firms. Again, getting back to the concept of making sure everyone's spending their time wisely. So the questions I would typically ask, right, are one, does the deal team have a member of the investment committee on it, right?
That's a great point. Yeah.
You want to make sure that happens. Two, does the deal team have, senior enough people in the room, in the diligence sessions to have credibility with their own IC and to get things across the finish line? And at Court Square, we actually staff 2 members of our IC on every single platform investment. And so the chance of us as a deal team being out of sync with the investment committee is very rare. This was constructed by design, as you can imagine.
Yeah. And so then is it fair to assume that a partner in a private equity shop is going to be on investment committee?
No, not even. So oftentimes the generic title would be managing partner. Those are typically folks that are on the investment committee at private equity firms. And so you want to make sure that you're getting managing partner level engagement. And if you're not, you need to ask yourself, is that a good or a bad sign, right? The other thing I would say is if you get an opportunity as a seller or founder to meet an investment committee, you should absolutely take it, because ultimately they're going to be the ones that are going to determine your fate, both to decide to do the deal, but also what life is going to be like and what your ultimate fate will be when they decide, it's time to sell a company in 4 or 5 years' time.
At Court Square, does the investment committee always meet face-to-face with a platform company, or is that a rare invitation?
It is a selective invitation. And, in this pseudo virtual world, we've been doing virtual meetings sometimes, but oftentimes we're ended up meeting the founders of a platform deal before we decide to transact.
That is really helpful insight, Brian Schmidt from Court Square. Thank you so much. Nick Moritsugu from Imperial Capital. Investment committee is something I think of a black box to a lot of sellers or entrepreneurs. Could you describe investment committee at Imperial and what you think would be really helpful for a seller to know about investment committee?
Yeah, and listen, I think investment committee is different at every private equity firm, but I would say it is intentionally, to a degree, a bit of an adversarial process where an individual like myself is bringing a transaction forward, right? And we have a lot of other smart folks in the room and around the table whose job it is to ask tough questions of that individual bringing that transaction forward, right? And so I know it can often feel like, from the lens of a seller, when we're asking a lot of diligence questions or asking perhaps some downside oriented or focused questions like, hey, why are these guys asking this? But a lot of that, frankly, is so that I can arm myself to go into that conversation and that dialogue, right, with a high degree of confidence, knowing that some of these questions will come up. And I think, it's really built on the philosophy that, from my standpoint, I need to have a high degree of conviction and a high degree of belief in any individual opportunity to bring it forward to that group. And it's that broader group and that broader partnership whose job it is to ask questions and say, have you thought about this? Have you thought about that? And to challenge that thinking and that conviction. And so, I think the last comment I would make is there's a reason why we focus a lot of those questions on downside type elements, because it's frankly to help me help you a little bit, help me go advocate for this deal at committee.
Is it helpful for you if somebody from Imperial's investment committee is participating with you in the discovery calls and the diligence calls and all like that?
Yeah, and it's something often in the later stage of a transaction we'll do is bring an individual founder or CEO or leader either to our offices or have them meet with a few more people in the partnership. Because as I mentioned in one of my earlier responses, yes, there's the financial and other kind of strategic rationale to do the deal, but it's also about the people that you'll be entering into a partnership with, right? Like a lot of the people that we do transactions with, we're asking to roll over equity and to go work alongside us to build a bigger business. And so it's important that, the rest of the partners and other folks at our firm get a chance to meet them and spend time with them.
Excellent. Nick Moritsugu, thank you for your insight. Bill Dyer from Boathouse Capital. Tell me, if you will, about investment committee. What's it like at Boathouse? And what do entrepreneurs not know or not understand about investment committee that you think would be helpful for them to really understand?
So I guess I can speak to our investment committee, certainly, and then I can speak to what it was like when I worked back at American Capital, which was a very large institution back in the 2002 to 2008 timeframe.
Great. Yeah.
So, it might demystify, that sort of committee as well. So at least at Boathouse, we're small. We've only got 18 employees. Our committee is 4 people. I'm one of those 4. And so, we don't have that many surprises at committee because we're small. And, if we're doing our job right, we're talking about deals with one another all the time. And so there shouldn't be a lot of surprises. And, we go to committee multiple times. So it's not like we go once and it's like, ta-da, here's the information, guys. What do you think? It's rather, if I'm going to close a deal, I'm probably going to go to committee 3-4 times before the deal closes, just so that we can avoid surprises. And, the last thing we want to do is lead a partner down the road that, hey, we might close this deal, blah, blah, blah. And then we just don't. Committee is 4 people. We have a unanimous approach. We don't generally, actually vote in committee. It's rather a consensus-driven process. One person might advocate for a deal, and if the person isn't finding a lot of support, then the deal probably dies. Usually it doesn't happen that way. If someone brings a deal, usually there's support for it. But I guess maybe the most relevant thing to this is because we have a multi-visit sort of approach. When we first look at a deal that we think is interesting, the deal leader brings it to committee for an initial support check. And, if you get the green light at that initial meeting, everyone now is informed of the deal. And then, maybe at that point, more diligence is done. Maybe at that point, a term sheet or an LOI is signed up. And then you go into more formal diligence, and you'll make several visits to committee before you actually close the deal.
So by the time you make an offer, indication of interest or LOI, it's been to your deal committee at least once, maybe twice.
Correct. So the hope is that avoids a lot of surprises. We might find something in diligence that that surprise us, but I don't expect to go to committee later and get surprised with my colleagues telling me, hey, we just don't like this,
right,
or the situation. Well, geez, we talked about it a month ago, and what changed?
And how's that bigger from a much larger organization like you were referencing earlier?
So at American Capital, at its peak, it was 725 employees. It was quite large. It had offices in several places around the country. We were the Philadelphia office. That's what we were doing before we launched Boathouse. I was not on that committee. That committee was much bigger. It was probably 8 people: CEO, CFO, COO, a few other seasons.
Also a public company, to put it in perspective.
Correct. Yes, you're one of the few that maybe remember it then.
Their office was right a block from me in Bethesda.
Yeah. Very few people, surprisingly, because it was as big as it was everywhere back then. I mentioned American Capital, and most people don't remember it anymore. Its assets ended up getting bought by Ares, the BDC. But that was typically a 2-visit process. It was, when I first joined in January of 2002, the process was initial committee was an email to the committee. The committee would give thoughts, and then you go back for a final committee. And that was a disaster because it happened time and again that, people would sign up deals, bring the final committee, and the deal would just totally go nowhere. So they actually, in maybe end of 2002, they changed up the process and came up with an initial committee meeting and a final. And and it actually worked quite well. I actually give them a lot of credit. As big as they were, they basically, those people on the committee had, by 2005, they were probably in committee 5 hours a day, 4 days a week.
Wow.
And so the process actually worked pretty well, where you had an initial committee meeting, you went to committee, you got a green light or not, and if you got the high sign to move forward, the committee had seen it, had vetted it, and then final committee, actually often initial committee was a lot longer and more contentious than the final. But that was very much that was not a consensus driven. Well, at least I wasn't on the committee, so there was no consensus from any of us. The committee was making, any and all decisions. And I think one key difference, was there because it was a big organization. When you went to committee, it was a big deal. You had to really prepare all your information. So it was hard to be nimble as an organization in that regard. With Boathouse, we meet every Monday, as we did at American Capital, but it's only 18 of us. And hey, I've got this crazy deal that came in. Like, what do you guys think? No, quick kill, moving on. You would never go to committee back at American Capital with an idea or hey, I haven't really figured this out yet. It was a 2-week process to prepare for even.
That's great. Yeah, that's great perspective, Bill Dyer. Thank you for your input there. Josh Bilmes from Oceans Equity. So, Josh, this is going to be an interesting question. I want to talk about investment committee. You've interacted with investment committee your entire career. You've recently founded Oceans Equity. Maybe you could tell me what investment committee is like at Oceans Equity and how that's different from what somebody might find at a larger or traditional private equity group.
Yeah, I think that when you look at investment committee in general, what does that mean? What's the mystery behind it? I don't really think there is much mystery. It's a very subjective activity. Oftentimes the facts about a business or an opportunity are known and they're listed out. And where it gets subjective is you weigh those deal merits and deal risks against each other in sort of a very thoughtful and fair and balanced conversation. The point of investment committee is to gather their perspective and experiences of all the participants who have a vote or a say, and you want to absorb all that. Everybody comes together as a team, but they have a different experience or a different perspective from other facets of life, other facets of business, and to hear those viewpoints and to digest them is kind of this, this chemistry of how you draw a conclusion. It's like Lennon and McCartney with the Beatles, right? They come together and they create something. Sometimes it's based off of subjective and intangible qualities, but it's great. People like it. So you hope that through committee, you can distill all of objective set of facts into a reasonable set of conclusions and say, here's how we can move forward, or we can't move forward for these reasons. And it's trying to problem solve for potential impasses, or how do we circumnavigate those things so that we can reach resolution and find a happy close. And I don't think everybody really appreciates though how much goes into the softer points of who are the people behind these investments and how are we going to partner with them and what are their personality traits and what drives them and what are their ambitions. It's not just here are the numbers, here are the metrics, and this is a sort of a quantitative exercise by a bunch of geeks with calculators. There's a big focus and energy that goes into the who and the how and the why of the opportunity.
And then how do you think about now? So you've been with large private equity for all your career. Now you're with the smallest of private equity, which is your own fund.
Sure.
How do you think about investment committee in that context?
Yeah. So look, I've had a career for almost 20 years in private equity and at many different firms. So I've seen all different flavors of the committee process. And what I am endeavoring to bring to the Oceans Equity committee process is real intellectual honesty, a safe environment to speak up and say, hey, I don't agree with you. and here's why. It's no hard feelings. We should be able to say hard things to each other and not fear, any sort of retaliation or anger, resentment, or any of these things, because sometimes, business conversations are challenging. And oftentimes, as I'm talking about the subjective nature of it, there's differing viewpoints. So really it's about is being able to more or less clinically present feelings or observations and differing viewpoints and saying, how do we, capture and solve for all of these concerns? Or if we can't, can we simply accept those risks and we choose to take them together as a team? And that's what we're trying to do, right? A safe place to speak up and say yay or nay, and here's why. And hopefully by the end of that process, we'll get the best answer.
That's good insight. Josh, Bilmes from Oceans Equity, thank you for your feedback. John Findlay from Periscope, I want to talk about investment committee. What is it that entrepreneurs or sellers or founders, what is it that they don't know about investment committee that they should, that would make them more effective in their process?
Yeah, I mean, we are still despite being founded well over a decade ago, we're still a smaller firm. We're nimble, but we have I would say, a more inclusive IC. The decision making has to be unanimous, and we are very intentional with how we set up our check-ins with IC as we conduct our due diligence. One thing that we also like our IC to have the opportunity to get during a deal process is meeting that team, particularly when we're looking at new platform opportunities. We really believe in partnership and investing and backing in people and great cultures. And we take our culture very seriously and the values and the mission statement we have here. And so getting that opportunity to sit down with those founders and their teams is a tremendous opportunity for the IC to really see what the deal team is seeing. And what I would recommend to anyone in that kind of situation is being willing to come in and be that entrepreneur who's going to put forward a bold vision. It doesn't necessarily have to be one that is achievable in the next 3 years, but set that North Star and break it out into a 3 to 5 year increments to really set really lay out what is the roadmap across all the functional areas of the business, or perhaps through M&A, since that's going to take on more importance with an institutional investor over the next 3 to 5 years. But also be willing to talk about the weaknesses in the businesses. We do not think that is a negative portrayal of your business. We see that as opportunity. And I like to spend just as much time talking about the weaknesses and how we plug those and take advantage of those opportunities than we do talking about how we invest more in sales and account management and marketing budget to penetrate the market in a greater way.
I would think that self-awareness of where we need to be better, where we could be better, has got to be encouraging for any investor, right?
Yeah, no, I agree. I do think that, back to partnership and talking about the weaknesses, talking about the strengths of the business and the levers we can pull as partners, the softer skills and the willingness to understand that we're not operators, nor do we want to be operators in the business, but we do have a lot of common threads and successes from our existing portfolio and exited investments that we can pull from that can help out these entrepreneurs and enable us to be able to create great outcomes for not just the investors in the deal, but also the rollover investors, the management team members who receive equity, et cetera.
John Findlay from Periscope, thank you. Casey Swercheck from Alterna. I want to talk about investment committee because I don't think a lot of people understand it, are familiar with it, or understand how it impacts the seller in a transaction. Can you talk about that in a descriptive way and then maybe what it's like at Alterna?
Yeah, sure. So investment committees all work differently in terms of how voting structures work. Some are simple majorities, some are super majority, but every every private equity firm has one, right? And they're typically meeting every Monday. There's multiple meetings throughout the week where you're checking in on deal processes, but it's a formal process that per the terms of private equity fund that you're investing out of, there's an LPA that says everything must go through a deal review, vetting, and approval process, and that involves formal investment committee votes along the way. And that's not just on the front end of the deal, that's subsequent to the deal as well, agreeing to increases in leverage levels, agreeing to add-on acquisitions, agreeing to when's the right time to sell the business, right? And so, in a smaller firm, I think more groups tend to operate how we do. We're a firm that's 9 professionals in total, 3 partners, all of which are on the investment committee, and we have unanimous approval in order for us to do anything. Our view has always been, there's 3 of us and we can't align on what we want to do next, then we probably shouldn't be doing it, right? I've been at firms where the investment committee is upwards of 12 people, and that's a very different dynamic. You have dissenting voices on almost every transaction. And so I've got friends in the industry that work at firms that clear an entire day for their investment committee process and will run deals through 6, 7, 8 hours of discussion looking at every angle possible. So there's a lot of different varieties of it, but just know it's part of I've never met a firm where there isn't a formal investment committee process.
And is there something that that you would suggest to an entrepreneur as it relates to investment committee, or just focus on presenting a good business and that'll take care of itself?
I think it's predominantly the latter, but be aware of it, right? Understand if you're at a bigger firm, you may only be working with one partner, one principal, and your view is, well, if I get the buy-in of that partner or that principal, then this is going to become a transaction, not knowing necessarily that there's a whole cadre of people, of other partners on the other side of that one investment professional that also have to get buy-in and sign off on this. The good news is it's not as though you get to the end of a 3-month, 5-month, 6-month process, whatever it is, and then all of a sudden you meet all of those people. There's multiple check-ins with that investment committee along the way. We meet as an investment committee every Monday. So you just need to be aware that there's other voices in the room, and I would rely on that professional at the firm to kind of help guide you through that process and what some of those hot button items might be.
Casey Swercheck, thanks for your insight.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.